Hello and welcome. You're watching Republic TV, and this is a special broadcast brought to you by Republic Business. Just one day away from the Union Budget is going to be presented by Finance Minister Nirmala Sitharaman, and the day on which she has presented the economic survey, we are delighted to have with us the man who has transformed the banking ecosystem and has developed HDFC into financial powerhouse, Keki M Mistry. Thank you for joining us and speaking to us, sir.
Thank you very much. Thank you. Pleasure to be with you.
Sir, let me begin by asking you, the Finance Minister is going to table the budget, going to announce the budget tomorrow on 1st of Feb. What are the top three things that you are watching out for in this budget this time?
All right. So, sure. So I won't say three things. I would say 6 or 7 things which I think will be the focus of the budget. The first to my mind will be growth. In this year, the year which is going on, our actual growth may be a little lower than what we had originally targeted. And RBI has lowered the target rate to 6.5%. We may actually be a little better than that. But we'll be lower than what we were in the previous year. So I think focus will be also on growth, to get growth back into the system. That is number one. Second focus will be on job creation. We are a young country. We have a huge number of people who are passing out from business schools and colleges every year. And it is important and critical that there are enough jobs that are available for these people. So job creation will get a focus. And when you talk of job creation, there are 2-3 sectors which are create a lot of jobs, like, for example, infrastructure, housing. So those sectors could get some mention in the budget. Okay. The third focus area of the budget, according to me, will be consumption. How do we improve consumption? Ours is largely a domestic consumption-driven economy. And if we can create jobs, then jobs will lead to income. Income will lead to consumption. Consumption will lead to manufacturers needing to produce more. And because they want to produce more, they'll need to hire more people. So that way, the economy will keep revolving. Now, one of the hindrances to consumption is one of the ways to encourage consumption is if we were to lower the tax rates. And when we lower tax rates, it should be across the board, not just at the lowest end, but also at the highest end. So across the board, if tax rates are brought down, then I think consumption will get facilitated. And it's a misnomer to believe that when you lower tax rates, the tax collection reduces. If you actually take two recent examples, I think it was in 2018, that the corporate tax rate was lowered to 25%. And we've seen the buoyancy at which the economy has grown, the corporate sector has grown, and thereby tax collections have also grown. A second example I can give you is about Maharashtra. When during the peak of the COVID crisis, Maharashtra lowered the stamp duty that is payable on real estate transactions from 5% to 2% and then 3%. And that again spurred a huge amount of property transactions. More construction happened and lots of jobs were created. So reducing tax rates actually not only improves sentiment, but also over a period of 1 or 2 years starts improving the overall tax collection. The fourth focus area of the budget, according to me, will be capital markets. We have seen a lot of middle income and even slightly lower middle income people who have become first-time investors in the capital markets. So some incentives for the capital markets. Then I think there will be something for the manufacturing sector, something for the rural economy. Some direct tax changes could possibly happen. Like, for example, you take the example of a buyback tax. Last year, tax on buyback was shifted from the company to the individual, which is fine. But the rate at which the individual has to pay tax on the buyback is he has to pay tax at his income, at his marginal tax rate. Now, in reality, if he was to sell the same shares in the market, he would end up paying only capital gains tax, which is at a much lower rate. So therefore, it would be appropriate if the buyback tax rate was also lower to bring it in line with the capital gains tax rate. And last focus, I think, will be on fiscal discipline. The finance minister said that this year's fiscal target would be 4.9%. I think we will meet that target. And next year, the target was 4.5%. I think every effort will be made to get to that 4.5%.
Right. And sir, since you mentioned the things that you are watching out for in the union budget and what are the key things which are necessary for the Indian economy at this juncture, let me ask you this question about the capital expenditure, which has been one of the driving force for the economy, because we know when there was uncertain times, the government stepped up its expenditure, especially capital expenditure. Now the economic survey today says that now it's time for the investment baton to be passed on to the private players. And when government came up with the heavy lifting as far as capex is concerned, they said that we are doing the heavy lifting, but now the economic survey says that investment baton has to be passed to the private players. So my first question to you is, what is your assessment of private capex as of now, and what is your take on what economic survey has to talk about the investment baton?
See, when we talk to people in industry, manufacturing companies, some industries people talk of creating more capacity, building more capacity, and so on and so forth. But many industries already feel that there is underutilization of the existing capacity. So private sector investment will happen. In some sectors, it may happen in this year. In some sectors, it will happen in the next year. But really, private sector capex is also a function of demand. So ultimately, you have to go back to demand in the economy. And demand gets created by if you create jobs. And demand gets created if you leave more money in the hands of people to consume.
Right.
So I think private sector capex will also, but I think government may, in my opinion, still need to do 1 or 2 more years of reasonably large investment in the infra space.
Right. And so last year, when the government presented the full budget in July, the allocation for the capital expenditure was 11.11 lakh crore. Are you expecting any step up? And if yes, how much?
I think in the current year, the actual expenditure has been a lot lesser. I don't know the exact amount of how much has been spent. So I think they will maintain that 11.1 number because they've not met that target they probably not meet the target in the current year and therefore will retain the same target for next year. That's my sense.
Okay. And so you also talked about fiscal consolidation, which plays a key role as far as Indian economy fundamentals are concerned. And we know 4.5% is a target eventually for us. But what next after that? Because some economists are also saying that after this point, we should not be much more focused on fiscal consolidation as we have been ever since the pandemic struck us. So after 4.5%, what next?
I agree with what you're saying. I think fiscal prudence was very important when our fiscal deficit was upwards of 5.5% and 6%. I think now we brought it down to a range in which we should be comfortable. In my opinion, anything between 4 and 4.5 should make us reasonably comfortable. But I think this is a discussion I'm sure the government is having with the international rating agencies, because if the rating agencies feel that by bringing the deficit down by X basis points, then the rating outlook for India would improve. Then to that extent, the government may feel it important to keep the fiscal deficit lower than the 4.5.
Right, sir. And sir, also in the pre-budget consultation meeting that Finance Minister had with various trade bodies, various industry bodies like CII, FICCI, ASSOCHAM, one demand that everyone put forward in front of Finance Minister was to go for income tax rate cut, to give more disposable income in the hand of the people to revive the consumption. I have 2 questions attached to this. One, where do you see this consumption problem lying? Is it the rural India which is having this subdued demand from, or is it the urban India? And do you feel that government will go for tax cut this time?
I think the government will go for tax cuts. I think there will be two things they would do. One is the minimum exemption limit could be stepped up a little bit. And the other, and I hope they do it, is that the tax rates are reduced across the board from the lowest level to the highest level. Right. Now, you can either cut the tax rates or you can cut the surcharge which is payable. Like, for example, at the maximum marginal tax rate, whilst the actual tax rate is 30%, the effective tax rate is 39%. So there's almost a 9% surcharge which is there. So a reduction of these taxes or tax rates will certainly create much more, good sentiment in the economy. Sentiment will improve and improve dramatically. And I think more money in the hands of people will lead to consumption, more consumption.
Okay. Right, sir. And sir, the next question that I asked you earlier as a part of this question as well, where do you see this consumption problem lying? If you have to explain that what is driving the consumption problem, because everyone is asking to revive the consumption, but where the exact problem is lying?
I think the fact is that the salary increases, the wage increases in the current year has probably not been as high as historically it's been. That's my sense. I don't have the data before me, so I'm not 100% sure, but that is one reason. Second reason also is that a lot of the consumption which was coming from the lower middle income people, that has slowed down because the single biggest item of expenditure for them is food expenses. And whilst the overall inflation, particularly core inflation, has been extremely well controlled by RBI, core inflation is at 3.2%, the fact is that food inflation has been very high. Now, it's difficult to control food inflation. It is dependent on so many factors which are not in our control. So higher food inflation has meant more money being spent on buying food and therefore less money being available for buying other items of consumption.
Right, sir. And sir, also when we talk about the larger consumption problem, one trend that we see is a consumption dichotomy, and that trend which signifies that the purchases of the high-end premium products is rising in India. That is what we call premiumization of the economy, which is happening at a rapid pace. And on the other hand, we are seeing that the sales of the FMCG products is declining. How do you decode this dichotomy, consumption dichotomy?
All right. So I think, first of all, I think this thing about high-end consumption being very strong and all, in my opinion, I could be wrong, was true up to a point. But I think now, in the last 3-4 months, we have seen that stagnating and maybe slightly declining.
Right.
As far as the consumption bucket itself is concerned, why FMCG companies are, if a person was buying, let's say, an expensive soap 5 years ago, he's today buying a less expensive soap. And therefore, the bigger FMCG companies, the multinationals who are producing that expensive soap, or for that matter, any item, are seeing a dip in their sales. The growth has not been to that extent.
Right. And sir, also we are talking on the day when Finance Minister has tabled the economic survey just one day ahead of the budget. So I will not let you go without asking certain questions on economic survey, obviously. So one of the important takeaways is that economic survey has pegged FY26 growth, GDP number between 6.3 to 6.8%. How do you decode this? Do you think that it's a very conservative number that the government has gone with as far as economic survey growth projection is concerned? And do you expect the growth to be even more or even lesser than this?
I would expect the growth to be at the higher end of the number the range that you quoted, 6.3 to 6.8. See, we must understand that every year when there is a growth, your base goes larger and larger. Your base goes bigger and bigger. And because your base is going bigger and bigger, you have to grow on that bigger base. So, and a lower base, percentage could be higher. On a higher base, the percentage could be a little lower. We see this with the advanced economies, where the base is high and therefore the percentage is a lot lower. So this is one fact. But having said that, India still remains the fastest growing major economy in the world.
Right.
Whether our growth is, as you said, 6.3%, which I don't think it will be more than that, but theoretically, even if it was 6.3%, we would still be the fastest growing major economy in the world. In my opinion, the growth actual number will end up at the higher end of that range that you were talking about.
Right. And so what is the one thing in the economy that is a cause of a concern for you? Because the things that you have talked about, that we are the fastest growing economy, we do have strong fundamentals and macros, we do have a balanced fiscal consolidation, we are doing it quite well on the fiscal consolidation front. But what is the one thing that is worrying you as far as the Indian economy is concerned?
I would say a couple of things. One is if we can expedite the process of creating jobs. You see, as I said earlier, I think India is a young economy. And we have so many people who are passing out from schools and colleges every year. And we have to therefore make sure that there is appropriate jobs available for these people. So this is one challenge that we may face in the years ahead. young economy brings with it huge advantages, massive advantages, because the growth potential therefore becomes huge, becomes very high. But it also presupposes that enough jobs are being created. So I think one focus area to my mind would be job creation. More and more job creation. Enough measures have been done. Let me not say that the government's done. The government's done a tremendous lot. But even then, despite all this, we still need even more focus on job creation.
Okay. And also, sir, we know that there have been certain geopolitical events that have happened in the past. And in the January, we have seen that Trump taking over as the president of the United States. There is a fear of tariff. There is a deep seek that has emerged, which has created a panic across the world. How do you assess the global economy as of now?
Well, first of all, let's talk of Indian economy in the context of the global economy. I mentioned earlier that India is the fastest growing major economy, and to my mind, we will continue being the fastest growing major economy in the world. Look, our economy is consumption driven. So it's largely based on domestic consumption. Domestic consumption is, to my mind, something like 60% of the GDP. So long as we can continue encouraging consumption by creating jobs, tariff or no tariff will certainly hurt every country, but it will hurt India a little less than what it could hurt other countries. Our total exports to US, to the best of my knowledge, is about 17 or 18%, 17 or 18% of our total exports. It might be high in certain industries, but not in every industry. So tariffs may hurt other countries more than they would hurt us. It would hurt every country, including us, but we would probably be hurt the least compared to others. And because ours is a domestic economy, if we continue focusing on the domestic economy, ensure that the growth is there in the economy, ensure that jobs are being created, ensure that consumption is happening, all of that if we ensure, then I think we can continue for many, many years to be the fastest growing major economy in the world.
Right. And sir, since you are someone who has spent his entire life in the banking ecosystem, so let me just ask you, Economic Survey has also flagged some words of caution as far as banking is concerned, even though they have commended the 12-year low NPAs that banking ecosystem is having, but they have given a word of caution as far as unsecured personal loans are concerned. So what is your take on that?
Look, to my mind, whatever little I have seen myself as a director in a bank, or I have seen talking to some of the CEOs of the other banks, many of the big banks have not really seen any major impact on unsecured loans or on asset quality. Yes, 2-3 banks have. I think the microfinance sector has had its challenges in the current year. But just saying that unsecured lending, by definition, just using the word unsecured lending is risky or is a big problem in the system, to my mind is not entirely correct. Maybe in a few instances where there has been, whatever reason, lending has not been as prudent as it could be. Yes, there could be asset quality issues, but otherwise, to my mind, no, I wouldn't be too worried about it, so long as the lending is done prudently based on the repayment capacity of the individual. When you lend money, the security of the loan is only the outside limit, that if nothing comes, if you're not able to recover the money, then only you'll exercise the security. The first job has to recover the money from the individual. Only if you can't recover, you'll use the security. So security is important, but unsecured lending in the system also helps a lot of the lower class of people to do things which they would like to.
So basically, you're trying to say that this is not the area that you are very worried about, right?
At the moment, if there's been prudent lending by a bank or by an NBFC, I'm not too worried.
Okay. You're not worried. Okay.
Not too worried. I mean, we have seen stress in the system. We've seen that a couple of banks have reported a sharp spurt in their consumer lending, but I think the view is very diverse. So many banks have not seen those asset quality problems on unsecured loans. Some have not. So what do you read into that? The only way I would read into that is that some banks have been even more prudent than other banks and therefore have not seen those issues.
Okay. And so the same survey also noted a widening gap between credit and deposits. So is that a cause of a worry for you?
It has been a bit of a worry, but now we've seen that the credit growth has come down quite a bit, and the deposit growth has picked up, and therefore they're broadly more or less in line. But for the first few months in the financial year, yes, loan growth was faster, deposit growth was slower. But that is again beginning to level out.
And so how do you see the Indian banking ecosystem as of now from a vantage point?
Extremely strong. Extremely strong. I think the Indian banking system is very strong, extremely well regulated. I must compliment RBI. I think RBI has done a phenomenal job in terms of regulating the financial sector, whether it be banks, whether it be non-banking finance companies. So hats off, they've done a great job. Our NPAs in the banking system are, I think you also mentioned, at a historic low. And buoyancy in the banking system is strong. Yes, growth, lending growth, deposit growth has been relatively less, but that's all right. That's a phase, and I'm sure we'll get over that phase, and the loan growth will go back to the mid-teens, mid to high teens.
Any worry that you have for the Indian banking ecosystem?
I mean, if you do imprudent lending, then obviously, I mean, if you're not taken all the precautions that you need to take when you give a loan, then that would apply to anyone. But the supervisory system in RBI is so strong that these things generally never happen.
Right. And sir, also one trend that we have seen in the January this year, India's banking ecosystem faced a very severe liquidity crisis. It was, I think, deepest in last 15 years as a deficit rose 3.3 lakh crore in the last week of January. And we also have seen that how RBI stepped in and took some measures to sort of solve this crisis of liquidity. Do you think that India's liquidity management policies on the RBI front needs a thorough review?
Look, I think what happened last year were a combination of two facts. The first thing that happened was that tax collections were buoyant. So government collected taxes, but spending in the system was little lesser than what they were targeting. So that money which was collected did not come back into the system and remained within the government account with RBI. So that's one explanation. The second explanation was that after, particularly in the last 3 months, the US dollar has become extremely strong against every currency in the world. The Indian rupee has depreciated maybe 3.5%. I don't know the exact number as of today, but roughly 3.5% about a week ago. You compare that with currencies like euro, currencies like the British pound, the Brazilian currency, all the other major currencies, the depreciation has been upwards of 5 to 6%. In one case, I think it was 9 or 10%. Now, to protect the rupee against the dollar, to avoid any volatility in the currency, otherwise you can have a sharp drop and that can create its own economic problems. RBI very rightly intervened in the forex market. RBI supported the rupee to some extent by selling dollars. And when you sell dollars in the system, you are obviously taking out liquidity from the system. So that was done up to a point because you wanted to sort of not create a knee-jerk drop in the currency. And I think it was done, it was the right thing to do at that point of time. But a combination of these two factors, less government spending and more money getting pulled out of the system because of forex operations, has resulted in some amount of shortage in liquidity. But again, RBI has been extremely proactive. You see that on Monday they came out with this OMO program, which should inject upwards of 2 trillion rupees, 2.5 trillion rupees into the system over a period of time. So I think right measures are being taken by the RBI to control, to make sure that enough liquidity is available in the system.
Right, obviously, sir. And also one thing that just coming after the budget is the RBI MPC on 6th of February. Are you hoping for a rate cut this time as a new RBI governor has been at the helm? Any rate cut possibility for you this time?
In my opinion, we should see some announcement towards more liquidity in the system. Would you do a rate cut at this point of time? I think it would be a very divided view. On one side, a rate cut would always improve sentiment in a big way. But at the same time, with the kind of strength that the US dollar is having, if we were to do a rate cut, you could see a further depreciation in the rupee, which could impact certain industries. So all in all, I think it's an even chance. There is a chance they could do a rate cut, but there is an equally big chance that they could defer the rate cut to next time. But putting liquidity into the system, increasing liquidity into the system is something I think they will certainly do.
Also, sir, when the RBI came out with these the measures to tackle the liquidity crisis, some people read these measures and the policy intervention by RBI as a precursor to the rate cut. So, do you also believe that?
No, I don't think so. I think liquidity is different and rate reduction is different. What is more important from a system point of view is liquidity. A rate cut benefits the consumer. Of course, improves sentiment, all of that. But economic activity would be supported more by liquidity. Yes, rate cut would also help, because if there is a rate cut, then borrowing becomes easier, and therefore that investment cycle pickup is faster. But at the moment, liquidity, in my opinion, is more important than just a rate cut.
Also, sir, I came across one of your interviews in the last budget, and you pitched this idea that the government should increase the foreign ownership in banks from 74% in private banks to 100%. And do you still have that take? And what is the rationale behind it?
Rationale is very simple. A lot of the money which is now coming from abroad, which is invested from overseas into India, is now invested in what is called passive funds, not active funds, but passive funds. Now, these passive funds follow an index, and most of them follow what is called the MSCI index. Now, in the MSCI index, the weightage given to banks in India will be dependent on the total amount of foreign ownership that is possible in a bank. Today, it is capped at 74%. If that 74% number was to increase to 100%, then to my mind, the weightage of banks would increase in the MSCI index, which could therefore mean more inflow of money from overseas. So that is a primary reason why I would advocate. There are enough checks and balances in the system. RBI is a very proactive regulator. There are restrictions on how much shareholding can be held by one individual, one company, one fund, one group, and so on and so forth. So it's not as if by increasing the limit, you will see a tearaway increase in foreign money coming into the banking system, but it would definitely improve sentiment and improve the weightage in the index.
Right. And so one other important observation of the economic survey is on the AI front, which says that AI may threaten jobs and can push the government for policy interventions going forward in Indian landscape. So how do you see that? What is your take as far as?
I think it is too premature to talk of AI. I don't think AI is fully settled in. I don't think the system of the world, forget us, the world clearly understands the power that AI has and what AI can do and how AI will be regulated. So let's just wait and see.
So what are your thoughts on DeepSeek?
Well, obviously, it's a very powerful tool. I've not tried it, so I'm going to try it one of these days, but it's a very powerful tool.
Right.
And I'm told a lot less expensive than the other AI tools.
Okay. Thank you so much, sir, for speaking to us, sparing time out and speaking and sharing your views with us, valuable inputs with us. Thank you so much once again.
Thank you so much. Thank you.